Network, and here today with me at VRIC is Louis James, editor at the International Speculator. Thank you for joining me today.
Happy to be here, Charlotte.
Great. So one topic that's come up again and again here at the conference, and was part of your talk, is Donald Trump and what his potential impact on commodities might be. Can you give me your thoughts in brief, please?
Well, normally I like to discount politicians, but in this case I do think this is a very important question, and I do think that we have real data here. Because before the election, we saw gold in particular, but other prices react with Trump in one way, and then after the election in another way. And I think a lot of people were willing to give him the benefit of the doubt and say, well, maybe he'll be better for the economy than we thought. There was a lot of Trump fear before the election that seemed to go away after the election. And now we have basically the reality setting in. And that reality is that Donald Trump is still Donald Trump. And whether you like him or dislike him doesn't matter. I'm not pro or against Trump. I'm just saying he's Donald Trump. And he's still a source of excitement and headlines and instability, which markets don't like. So this is very bullish for safe haven assets in particular. We like precious metals. Again, I'm not for or against Trump. I'm just saying that even if he does the very best things possible for the country, it will shake up things, it will upset apple carts, and that chaos, that transition period, is very good for safe haven assets.
Okay. Now, whatever the future may bring, right now it seems like many commodities are doing better than they were this time last year. Which do you think has the most potential in 2017?
I would say it's tied. The topic I presented on today was the year of the two yellow metals for 2017. I think both gold and uranium have a lot of upside. In terms of raw gains on the metal itself, I probably have to tip my hat to uranium. It is way oversold. Even with the recent tick upwards, it's way under cost of production. It's one of those things where it's absolutely not an if question, but a when question. Uranium has to go up if people want the lights to keep coming on. There's no question about that. It's all about timing. So I'm very bullish on uranium. I'm near term a bit skittish though. It's popped up and the equities have gone nuts. But there's still a situation of oversupply in the uranium market. That hasn't gone away yet. It might with Kazakhstan's cut in production. It hasn't happened yet. So very, very near term, I think there's reason to be cautious about uranium equities, but absolutely bullish on uranium. And if I had to make a prediction, I'd probably say that uranium will end 2017 with a bigger gain than gold. But I'm very bullish for both.
Okay. On the flip side, is there any commodity right now that you're just not interested in at all?
I'm not really one, but you get some very excited promotions about, well, cobalt is going to be way in a supply crunch, or titanium or whatever. And these stories are not necessarily untrue, and these metals are needed, but they're oddball markets. They don't have a clear, transparent market with an objective or somewhat objective spot price that's somewhat transparent, that you can track on a day-to-day basis. Their prices are set by contracts. So they're difficult markets. They're dangerous markets. I think there's money to be made in them, but right now I'm just not interested in these oddball metals.
Okay, that sounds fair. Flipping over to companies, in the past you said you like companies with big high-grade gold deposits. I imagine that's still true. Are there any you want to talk about?
It wasn't just big high-grade, but that's the easiest place to find high margin, and it's all about margin in the end. Does the deposit make money? If it's super high-grade, but it's underneath a national park, it's not going to make any money. I've refined my search a little bit. This is new research we've just been putting out to our subscribers, and I'll give you a little sneak preview, if you will. And that is, there is a more reliable way to look for gains in this space, and that is the people that are ramping up towards production. It's really striking. If you think about it, who's going to build a mine if they don't know whether they'll be able to do it or not? Most people wouldn't gamble like that. If you actually raise the money and start building your mine, you probably think you're going to be able to do it. And it's actually somewhat surprising that I haven't really focused on this before, but it's a well-known fact in the business, in the industry, that share prices tend to rise up as you approach first pour for a gold company or first production for other metals. Whether or not the mine actually makes money, as you approach commercial production, share prices tend to rise. It becomes more real. You have institutional investors lining up who can't buy an exploration play but can buy a producer. So it's an interesting sweet spot where you have, on the one hand, much better odds because you know that most of them actually succeed in building their mines. Of the 49 stories I found, about 90% of them actually built the mine. And you know that there are gains there to be had. So that's an area I'm focusing in right now in my research.
Okay. Any other companies you want to mention, or even types of business models that you like?
Well, I still like the prospect generator model. There's still a warm spot in my heart for the wealth generating capacity of a prospector that makes a big discovery, and that's where you get your 10 baggers. A company that's building a gold mine is not a secret, a market secret. People know it's there, they're building a mine, so it's not likely to be a 10 bagger in most cases. A discovery will do that for you. So I like discovery, but it's such a risky business that I still like the prospect generators. It makes sense to put other people's money to work on our behalf to diffuse the risk and have a basket of lottery tickets, as it were, any one of which might work out. I like that approach a lot.
Okay, well, that's all for me. Thank you so much for joining me today.
Thank you for having me.
Thanks. Once again, I'm Charlotte McLeod with the Investing News.